Let's start with one of the biggest reasons: economic uncertainty. During uncertain times, investors flock to gold. Why? Because it's what we call a safe haven asset. It tends to retain or even increase in value when other investments become risky or unstable. Right now, we're facing a lot of uncertainty globally. Major economies like the United States and European Union are experiencing slowdowns, with many economists predicting a potential recession on the horizon. Additionally, we've seen ongoing geopolitical tensions, from trade disputes to outright conflicts. All of these factors make other investments like stocks seem risky, and that uncertainty drives investors towards gold as a more reliable store of value. So, as long as economic and political tensions persist, we're likely to see continued interest in gold from investors around the world. Another major factor in gold's rising price is inflation. When inflation rates are high, the purchasing power of fiat currencies like the dollar decreases, meaning each dollar buys less than it used to. Gold, however, is known as an inflation hedge, meaning it holds its value better than cash when prices go up. Over the past couple of years, inflation has been hitting highs in multiple countries, with consumer prices increasing sharply. People are feeling the effects on everything from groceries to housing. When inflation is high, investors start looking for assets that maintain purchasing power, and gold historically fits that role. Its limited supply and historical value make it more attractive as a way to preserve wealth. With inflation rates still elevated and uncertain, the demand for gold as an inflation hedge is likely to remain high. Next, we need to look at central bank policies, particularly interest rates. Central banks like the Federal Reserve have a huge influence on the economy and, by extension, gold prices. When interest rates are low, like they have been for much of the past decade, returns on other safe investments like bonds drop. So, investors turn to gold as a more attractive option. Recently, the Federal Reserve and other central banks raised interest rates to combat inflation, but rates are still relatively low in historical terms. Even with these hikes, the yield on bonds and other fixed-income investments is not yet high enough to outshine gold in the eyes of many investors. So, with interest rates low, more people are turning to gold as a store of value and a shield against inflation. Until we see interest rates rise significantly, it's likely that gold will remain an appealing option for risk-averse investors. Another big driver of high gold prices is the weakening of the dollar. Gold is typically priced in dollars, so when the dollar loses value, gold becomes cheaper for foreign investors. This creates more demand, pushing prices up. The US dollar has seen some recent volatility, partly due to inflation and partly due to global factors like trade dynamics and economic policies. When the dollar's value fluctuates or drops, it creates more interest in gold from international markets. This effect is compounded when central banks, particularly in developing economies, start stockpiling gold to reduce their reliance on the dollar and stabilize their reserves. With the dollar showing signs of continued weakness, we can expect this to further support high gold prices. And finally, let's talk about demand from investors. With the stock market showing volatility and bonds offering relatively low returns, investors are increasingly moving into gold. We're seeing this across individual investors, institutions, and even hedge funds. One area where demand is especially strong is in gold ETFs, or exchange-traded funds that track the price of gold. They allow investors to easily buy and sell shares without physically holding gold, making it accessible to a wider audience. On top of that, institutional investors and even hedge funds are increasing their gold exposure as a way to manage risk. This broad-based demand means that prices are not only sustained, but are driven higher as more people add gold to their portfolios, whether for stability, inflation protection, or safe haven status. So, there you have it. An in-depth look at why gold prices are reaching all-time highs. From economic uncertainty and inflation to currency devaluation and high investor demand, it's a perfect storm propelling gold's value upward. Each of these factors builds on the others, creating sustained demand and pushing prices to new heights. What's your prediction? Will gold prices continue to rise? Let us know in the comments. And don't forget to like and subscribe for more insights on gold, investments and market trends. Thanks for watching, and we'll see you in the next video.